Turn to retail and the consumer, of course. Christmas is tomorrow. Visa out with new data showing holiday retail spending. It increased almost 5% year over year. That's despite a shorter shopping window between Thanksgiving and Christmas this year. But the outlook from here becoming more uncertain with consumer confidence dropping and tariffs cited as one of the reasons why. And that's why my next guest is watching, as what she's watching as well, for more on the potential impact of tariffs on retailers and the name's best position in the new year. Let's bring in Dana Telsey, CEO and Chief Research Officer of Telsey Advisory Group. Dana, happy holidays. Good to see you.
Happy holidays. Nice to see you, too.
All right, so Dana, answer this question for me. I've been talking to a lot of people about the retail sectors. We talk about it on my show, Worldwide Exchange. Are tariffs just bad for retail overall, or are there some companies that might actually benefit?
Well, when you have companies, some of the companies make a lot of the goods here in North America, they'll benefit. You look at Bath & Body Works, where 85% of their goods are made in North America. That's an opportunity for them. You look at Birkenstock, where most of their goods are made in Germany and in Portugal with the cork. That'll be fine for them. But the speed to diversify your sourcing, because there is no China like China, is something that all our companies are gravitating towards. And a lot of it certainly is in the athletic area where there's been more exposure.
All right. So if companies are looking to diversify their supply chain, generally that increased costs. Does that mean that cost is going to be passed on to consumers? When I look at the credit card data, record high levels of credit card debt right now, $1.16 trillion. Should we be worried about higher prices in the new year?
Yes, with tariffs coming, and if they do come, and most of the retailers and brands have to pass on the price increases, that is a headwind. And that's why you're continuing to see the value retailers, whether it's the off-pricers, whether it's discounters like Walmart, continue to gain share. And you're seeing more brands even sell through these value channels.
One other question I want to ask you about, this is a little bit in the weeds, but I was talking to some traders about this, about retail in particular. When it comes to tariffs right now, there's an exemption. They call it a de minimis exemption that basically leaves goods from companies like a Shein, a Temu, untariffed. So if that was taken away, it would hit those fast fashion names. Are there other companies, publicly traded companies, that would benefit if the cost of Shein and Temu and those other fast fashion names were just higher?
When you think about fast fashion overall, take a look at the Inditexes and the H&M. H&M makes around 25% of their goods in China. The umbrella that you have with off-price, and off-price would be a beneficiary, is they're always priced lower than brand names. The other area that you would have is when you look at many of the specialty apparel retailers, even companies like Abercrombie and Fitch, where they've gotten their sourcing from China down to single digits. And I think it would benefit some of those retailers also.
All right. One other thing you're watching is supply chain. I was actually just talking to a big logistics company today just about customers pulling forward ahead of tariffs, ahead of a possible port strike. Also, Lunar New Year is a bit earlier this year, so it's like three big things coming up in January that could really jam up the supply chain. Is that almost definitely going to raise the price of a lot of these things that are getting pulled forward? From what I'm hearing, higher margin, big ticket items. I mean, for big screen TVs or high-end retail, does that automatically push up the price? Or do you think retailers, do they absorb some of those costs?
I mean, it's always a little bit of absorbing costs, and it's always passing some of it on. We know from the tariffs last time, retailers passed on some of the costs. What's different this time is the agility that many of the retailers have in order to diversify, in order to manage their cost structure. They're able to deal with it, but not if you have China, Mexico, and Canada. There's only so much wiggle room that you have of where to source merchandise, except for companies, like I mentioned, Bath & Body Works and Birkenstock.